Be Wealthy and Smart, episode 1288.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about what the market is telling us about rate cuts and how it's saying there's an 83% chance that the first Fed interest rate cut will come in March of 2024. Now, what's really exciting is the market is pricing in multiple rate cuts. 5 to 6 rate cuts for 2024 are projected according to markets. That is going to get rates substantially lower, which I'm going to talk more about in just a minute. But everything is on track for the projected interest rate decreases that I've been talking about since last year. The booming real estate market returning. Inventory is so limited. We still have much lower inventory than normal. And that is going to create the buying frenzy that we saw a couple of years ago again. So basically, we have seen the S&P take off on a tear of a rally since October 27th. It's up 16% since then. That's a good year, let alone a good quarter. And many people are starting to get worried. They're starting to wonder if the market's gone too far, too fast, if there's going to be a sharp pullback. I'm not seeing that. The market looks like it wants to continue to rally and into January, which is typically one of the best months of the entire year historically. So we should see that follow-up rally into January and all through the first half of 2024. I think things look very good. It's at that point that we may take a pause. And people may be surprised that the market is getting ahead of itself. We're already seeing a little bit of froth come in terms of artificial intelligence, with venture capitalists already substantially improving their bids on a private artificial intelligence company. You can see that things in AI are heating up and heating up quickly. That goes along with my theory that AI is going to be our next bubble this decade. So we're already seeing it at the venture capital level that eventually is going to work its way through into public companies, although we've already seen NVIDIA gain over $500 billion of value since they got more involved in AI. And we're going to see more and more companies get a premium based on AI. But eventually, we have private companies that we've invested in that are going to go public, and I think those are going to have some spectacular debuts. But back to interest rates. The 10-year yield fell to 3.83 a couple of days ago, and that has not been seen since late July. And it's all because of the numbers. As I always say, the Fed is data-driven, and they go by the numbers. And their primary inflation rate, the core PCE price index, is now at a 2% annualized rate in the third quarter, according to Commerce Department revisions. So with this fall in inflation to the Fed's 2% target in the third quarter on an annualized basis, now we're hearing less and less calls of recession and more people understanding that economic growth is continuing and looks still very strong. Financial markets are now betting that the Fed will cut its key policy rate to 3.8% by the end of 2024, which is down from 3.83% ahead of the new data we just got. So with the federal funds rate currently at 5.25% to 5.5%, this is looking very restrictive as there is a rapid reduction in inflation. And the markets are saying there's an 83% chance that the first rate cut will come at the March 20th meeting, which is up from a 79% chance before. And markets are also saying they see a 42% chance of 1.75 percentage points in rate cuts in the next year. The economy is still growing at a healthy 4.9% in the third quarter, which was revised from an estimate of 5.2% due to somewhat more moderate estimates of consumer spending. We also had jobless benefits edge up 2,000 to 205,000 through December 16th. So we're seeing a trend of disinflation and solid growth continuing. So everything is looking on track for exactly what we've been talking about. And with 5 to 6 interest rate cuts priced in next year, look for that housing market to start to take off. All the naysayers who have been saying the housing market was going to crash are going to have to eat crow, because it's going the opposite way and about to heat up into a spectacular real estate bubble in a couple of years. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for insights on your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.